Patrick has helped raise NYDIG's status as a national institution. We welcome Patrick Sells, and we're going to learn more about the future of Bitcoin and virtual currency.
Well, thank you everyone for having me, and thank you to the Kentucky Bankers Association for the partnership with NYDIG. As mentioned, I serve as the Chief Innovation Officer today at NYDIG, but only a couple years ago, I was actually a community banker myself at a small bank called Quantic, where we launched the first retail Bitcoin product, which was a Bitcoin Rewards debit card. And so I do love banking and actually consider myself much more of a banker who loves crypto, not a crypto guy, despite being dressed much more like a crypto guy today. As I was preparing for my talks this morning, I called an old friend to say, hey, look, I've got this talk today, and I'd like to start off with something funny. And I was thinking I'd do some type of self-defecating joke if anything comes to mind. And she paused for a few seconds. And then she goes, Patrick, did you mean to say self-defecating or self-deprecating? And then I realized, I'm not planning to self-defecate up here, though some in the industry may think of crypto and Bitcoin as self-defecating on the banking industry. But what I am here to do is talk about Bitcoin and cryptocurrency. And really kind of three things I want to share and for you to take away is one, that your customers really trust you and they're looking to you to be that place of safety and soundness. And that's especially true when it comes to Bitcoin and cryptocurrency. Now, I remember being a community banker and getting to know many others in the industry, and there was this kind of feeling in ways that it didn't feel quite good enough for many of my customers. I was always trying to figure out what the next widget or technology I needed to be exciting to them, but I wasn't really the maybe ideal thing or partner for many of them. And I think here with Bitcoin and cryptocurrency is a really exciting opportunity for the industry because it is something that's new and exciting, and your customers really do want you to play a role here. When I joined NYDIG a couple years ago and we were trying to figure out what is it that we think the industry and the country needs most, we began by conducting some pretty extensive consumer research. And what we saw was that about 1 out of 5 Americans owned Bitcoin today. But what really stood out to us was that almost 80% of those who did were not comfortable with how they had to get access to it. In other words, they didn't want to go to a crypto native company, but they weren't going to let that stop them from getting Bitcoin. It just wasn't their preference. And then what probably mattered even more to us was when we looked at those who didn't own Bitcoin, that 80%. What we saw there was over 50% of those who didn't. It's not because they didn't want to own Bitcoin. It's because they weren't able to get comfortable with going over to accessing it from these crypto native companies. What they really wanted was to be able to access it through their bank. And so somewhere between 20 to 50% of your customers want you to make Bitcoin available to them. Just like you play the trusted intermediary today between them and the US banking system, they want you to play that trusted intermediary between them and the Bitcoin network, and to do it in the ways that you guys know how to do it. If you followed much news in the crypto markets over the summer, we've seen many crypto native companies blow up. Why? Because they don't operate in safe and sound ways. What that has done is just further emphasized or further supported the notion that we set out on, which is customers really do want this from you, and that's even more true now than ever before. A couple of the banks that are live with us today that offer buying, selling, and holding of Bitcoin have said that within even just a couple of months, over 10% of their new customers are coming to them because they make access to Bitcoin possible. So the first thing is your customers really do trust you. And when it comes to matters of money, especially something that's new, that matters even more so. And I think this is a great opportunity for banks to take advantage of that and win new customers and retain those that you have. So next, what is Bitcoin and cryptocurrency? Obviously, I only have a couple of minutes here, and so I'm going to do it in a very non-technical way. And I think a helpful analogy also is to think about Zoom. You know, only a couple years ago had someone stood on this stage and told us as an industry, hey, your bank's gonna shut down and you're gonna do everything you need to over Zoom and video conferencing. None of us would have thought that was possible. We probably would have laughed at them. But what happened? We did it. And today the world's returned to normal. And just like here, we all recognize there is tremendous benefit in being together and being in the office. But I think we also can all recognize that that doesn't mean Zoom's going away. Virtual meetings do play an important part, and they can help do things better than in-person meetings. It doesn't mean I want my entire life to be Zoom, but I do want to be able to use it when it makes sense. Very similar with Bitcoin. I think for most companies and Americans, they're not wanting to say, hey, I want to get rid of all my dollars and have Bitcoin, no more than I want to get rid of all in-person meetings and use Zoom. But I do want to be able to use it when it makes sense or in a small way, and I want to be able to own a little bit of Bitcoin. I shared that analogy, though, to mainly point out, if I asked anyone in this room, besides the amazing tech staff, how does Zoom actually work? I couldn't answer it. You couldn't answer it. But think about it. It's kind of amazing. You can have 100 people from all over the world on at the same time, able to see each other and talk to each other. Now, sure, I can explain some of it, like there's a camera on my laptop and there's a microphone, but I actually can't go much deeper than that. But that doesn't mean I still don't understand its importance and use of it and don't use it in my life. I think with Bitcoin and cryptocurrency, the goal here is to not be held back, to say, well, until I feel like I understand all of it, then I'm just not going to deal with it. Instead of saying, look, I can understand some of it, I can understand enough of it, and then I will continue to learn more about it. But just like with most technology, we don't actually need to understand all the intricate details. So then let's talk about Bitcoin in the most simple terms. What is it? It's nothing. It is simply this notion of digital scarcity. An analogy could be, think of it as someone had bought 21 million websites, Bitcoin1.com, Bitcoin2.com, Bitcoin3.com, and there can be no more, just like there's only 21 million Bitcoins. And so now, because there's a finite supply, the more people that say, hey, I want that, each one of those domains become more valuable. And in terms of, okay, so you have these 21 million URLs in this very simple analogy. What the other thing about Bitcoin is okay, how does that work? It's simply just a ledger. The way that all of you guys have a ledger at your bank, Bitcoin is just a ledger, but unlike your core, it's publicly available to anyone and everyone, as opposed to having to be a bank employee to log in. So what that means is anyone at any time can go to the internet and go to the public blockchain and see, okay, this account has this much Bitcoin. This account has this much Bitcoin. That's all it is. It's this public ledger that says there's 21 million of these things and who owns what, or who owns how much of the Bitcoin. Now, to think about why is it attractive, if that's kind of the technical understanding of it, what you have here is something that's a form of money that is finite in supply, and most importantly, isn't controlled by any one individual or a small number of people. If we think about, an example of something else that had monetary value, Beanie Babies, why did those not work well ultimately as a store of value? Because you could just make more Beanie Babies. Now, that doesn't mean I don't love that fluffy little doll I have in my house, but it's worth less the more of those they make, kind of like US dollars. We just talked about how we've created trillions and trillions of dollars. That doesn't mean I still don't value my dollars, but every time they want to go make more of them, it means my dollar is worth less. And we as Americans, feel that pain in a certain way, but if you think about the billions of people who live around the world, they feel that pain in far more exaggerated ways. Whether that's the more than 1 billion people living in triple-digit inflation all the time, or think of someone living in an authoritarian regime where someone can just make a decision and all of a sudden fundamentally devalue your currency. We've seen it happen in a real way with Russia. One individual made a decision, and it affected the value of the money that all of the citizens of Russia had. And so for many around the world, they look at Bitcoin and say, here is this form of money that's not controlled by any one person. It requires the consensus of everyone who's on the network to make a change. It's finite. It can't just be printed more, and that feels safe and desirable. Similar to how as an American, it feels desirable. You know, you may have heard the analogy of Bitcoin being like digital gold. We all probably have a fundamental recognition that like gold is something that's good and is probably a good way to save money over time. But the reality is how many of us actually own any gold coins? Probably pretty few. Why? Because gold's kind of a pain. It's where do you go get it? You got to ship it to you. You got to store it in a vault. There's a lot of friction in it. And so while many of us understand the value in it, many people don't own it. Now with Bitcoin, you have many of these similar characteristics, but it's something that anyone can access with just a couple clicks of a button and a cell phone connection. Two important things I want to comment on Bitcoin here is one, there's this misunderstanding that Bitcoin is an anonymous form of money, and therefore it's great for illegal activity. If you go back to how I first described it technically, what Bitcoin is a public ledger. It means it's the most known, visible form of money I think we've ever had in existence. And I think there's a misunderstanding that happened in pop culture or modern culture around how the governance of Bitcoin worked and that it wasn't controlled by any one person to this notion of anonymity. And I think many in law enforcement have honestly allowed that to be the belief, because if you are a bad actor who is not very educated, you're going to think, oh, Bitcoin, great, I can go do illegal shit. Well, that doesn't really work. Just about a month or two ago, there was a fascinating report that came out. The largest child pornography ring in the world in history was taken down. Why? They all used Bitcoin. It's the most traceable form of money ever to exist. They would have been far better off had they used US dollars. We would have caught a lot less of them. Could spend more time on that, but moving on. The next point is when Bitcoin was created, it used network theory as part of developing the token. And to understand then the value of Bitcoin fundamentally, it's about understanding the value of a network. Now, there is leverage in Bitcoin, and so that does affect the volatility of it, but fundamentally to understand the price and the movement of it is to understand how networks work. Here we can think of examples like Airbnb or Uber or Facebook. Those are network-based businesses. The way a Wall Street analyst would look at any network and the value of it is through what's called Metcalfe's Law. Metcalfe's Law tells us that the value of a network is directly proportional to the number of nodes on it. In other words, the more users on the network, the more valuable the network becomes. Think about Airbnb. Only 5, 6, 7 years ago, maybe if you wanted to go to the Bahamas, there was one house available to rent. But as more and more people said, hey, that's kind of a cool idea, I'll rent something from Airbnb, or I'll put up my second house or a room in my house on Airbnb. In other words, we joined the network. Airbnb has grown tremendously. Today, it's worth more than the top 7 or 8 hotel companies combined, despite not owning any property. That's the value of a network. And so going back to Bitcoin, to understand what's happening to this network is to understand how easy access has been and how many people are on it. And the reality is we're in the very early stages of the network development. Access for many Americans, while it's been there, was not something that the majority of us trusted. And so we didn't join the network. If you think about what's happening in El Salvador or other countries around the world who are adopting Bitcoin as legal tender, what that means is millions and millions and millions of more people are being added to the network. And so as banks and credit unions start making Bitcoin available and solving the access issue here in America, you can think about just the tremendous number of people who are about to come onto the network. What will that mean for the network? It is going to explode in value. Who benefits from that? Anyone who owns part of the network or who owns some Bitcoin. In terms of, so your customers want you to play the role of making access possible because they trust you to do it in a safe and sound way. Bitcoin is a form of money that is attractive, and for many people, it's not about getting rid of their dollars, it's about being able to use it or have a small allocation to it, just like I want to use Zoom for some things instead of everything. Why does it matter for you as a bank? As I mentioned, customer attraction. You will see more customers come to you as a result of it. Similarly, whenever your customers buy or sell Bitcoin, there are transaction fees, just like when they use one of your cards and there's interchange fees. Those transaction fees are non-interest income for your bank. And then I would argue maybe it's a softer from an ROI standpoint, but perhaps the most important thing is Bitcoin will drive your app engagement. Whether you want to fully recognize it or not, the reality is we all here are technology companies, just like Facebook and Uber is a technology company. If you go talk to those tech companies, the number one stat they'll tell you they're looking at is their daily app engagement. And is that increasing or decreasing? If it's increasing, they know they're going to retain and grow that customer. If the number of times they're clicking on their apps decreases, they know they're going to lose that customer because they're talking to someone else. The average American will click on their smartphone 2,617 times a day. How many of those clicks do you have? One of the things that we're seeing with Bitcoin is by simply making it available, agnostic to what your customers do, they're going to log into the app more. They want to see the price of Bitcoin. They want to see if their Bitcoin, if they own it, has gone up or down. What we're seeing is 200 to 500% increase in app engagement. When we then talk to those partners, what they're seeing is very clear correlation to the Bitcoin user or the person, again, whether they own it or not, they're engaging on the app more, and it means that they're taking out more loan products, and it means that they're opening up more deposit products. And so there's a great strategy of thinking about making Bitcoin available. Your customers can choose how much of it they want, and you can do it in a safe and sound way, but there's a tremendous overall benefit to your bank simply around the app engagement part. And with that, thank you guys for inviting me here, and I look forward to joining the panel.
Did you know that 1 in 5 Americans already owns Bitcoin? Big tech companies have taken the lead, but our survey found 80% of people would rather hold these assets with their local bank or credit union. Trusted community leaders like you. NYDIG makes it simple to add Bitcoin services to your products. Your customers and members can buy, sell, and hold Bitcoin as you generate non-interest income with each transaction. Our proven method is regulated and secure, just what you need to protect your community Bitcoin assets. This is just the beginning. Explore interest, rewards, lending products, and more. Learn more at nydig.com/banking.
Patrick, you're trying to drag us into a new era where we probably need to go, but banks are often looked at as financial counselors. Now, typically we disclaim fiduciary duties to our customers, but they look to us for financial advice. Bitcoin, we all know, has taken a substantial drop, and precipitous, if you will, drop in value over the past year. What should we do in terms of advising our customers who want to come in and buy Bitcoin?
It's a great question. I think, one, there needs to be a recognition that Americans are going to go buy Bitcoin, whether that's at an individual level or at a company level. And they're probably not wired to do diligence on who they're getting that Bitcoin from. Whereas a bank, before it works with any vendor, is going to do extensive diligence to know what are they doing, what is actually happening behind the scenes. And so I do think this whole question has to be oriented around that it's very likely that they will find an unsafe and unsound partner if I don't step into that role. Now, to answer that question more specifically, I think in making Bitcoin available, it also presents a great time to make educational content available. because that is something that's actually hard to find, good content around what is Bitcoin. And you can use it as a chance to educate your customers around it. The other thing is making sure that the appropriate disclosures are there and that they're aware of that. There's not things like FDIC insurance on this. And then just like when you want to roll out a P2P solution, you're going to put limits as to how many dollars will you let your customer move over that rail. When you make Bitcoin trading available, you can put those same limits in. Say, I'm not going to let you put more than $500 in a transaction, or on a day, $5,000. And so you do have those same types of controls for that, just like you do in other parts of banking. And the final comment I would give is that yes, it is volatile, but most everyone, even in this room, if you've never bought it, you probably know that it's volatile. And what, many of the banks that we've partnered with and gone live with, there's a high perceived level of risk as to what it's going to happen if my customers buy Bitcoin and then the price goes down like it just has. We just witnessed a pretty steep decline over these last 6 months. Across all of our platforms, no one has reported actually their customer complaining about the price of Bitcoin going down and that you let me into it. Because again, I do think there is a fundamental recognition that it is volatile.
Patrick, they want to do business with banks because banks are trusted, right? And it takes a lot of hard work to keep that trust. But as we all know, I don't get in Bitcoin. My kids do. They think I'm an idiot for not. The same idiot to put them through school. But at the same time, we have to make it available to those customers. As you say, we have to make it available to our customers that want it.
Right.
Otherwise, we're going to lose them. It's like not having the right suit at a store or whatever the case may be. So can you get a little more technical as to, and I guess full disclosure, NYDIG is an endorsed vendor of the KBA, and so its purpose was to provide an avenue for all of our banks to be able to get involved with Bitcoin with a customer base that wants to, and not have it on their balance sheet. Can you get a little more technical and tell us how that works so that the banker's not sitting there going, I got this on my balance sheet and I'm not sure I want it on there and it's too volatile for my balance sheet?
Yeah, we very much, even before I came to NYDIG, really credit goes to our founder, Ross Stevens, realized that, okay, this will be regulated. The entire crypto space will be regulated, even if the regulators weren't paying enough attention today, and it's going to be regulated just the way banks are in essence. And so when it came to building NYDIG, we took banking regulations and built every part of our business to mirror those regulations. I think in the current regulatory landscape today, it is not permissible for a bank or a credit union to be a custodian of digital assets. There was talk of that during 2020 under Brian Brooks. That has changed. I think the regulators will get there, but it'll be a couple of years. The way that NYDIG makes this available to banks is actually to where it's not the bank as the legal provider of the Bitcoin services, it's NYDIG as a regulated entity. And that happens through your finder's authority power, just like you could say, hey, we don't have a broker dealer, but we can partner with an independent broker dealer and we can give them a branch in our office. And that makes it easy for our customers to find them, but it has to be very clear what's the bank and what's the broker dealer. You can think of that same model, but now in the analogy of digital assets in your mobile app. So you can say, look, we're not the ones providing this. We have a partner, NYDIG, who's the legal and regulated provider of it, just like you're not the broker dealer. And instead of having an office in your branch, we have some screens on your website. And so by doing it in that way, it means you can make it available to your customers and harness the benefits of it, but you are not the regulated entity providing it, and the digital assets or the Bitcoin never touches your balance sheet.
Great.
So how have your bank clients responded to the decrease in value since the spring?
We haven't seen any really slowdown in the demand from banks to say, I'm going to make it available. I think there's a recognition it may be down today, but it's probably not going anywhere, and I want to go ahead and make access possible to those customers who want it. The other thing, if you go back to kind of some of those early stats I shared around how most Americans haven't been comfortable with where they could access it, the ones who were comfortable were the ones buying at it 50, 60, 70. For many who've never bought Bitcoin before, such as customers of a bank, they frankly feel it's more attractive to buy it at 20 than it was at 70. I think everyone kind of realized that it had peaked. And so both on the end user demand and on the bank demand, we haven't really seen a slowdown in desire for it, if you will.
I think it was Milton Friedman once said that if you allow people to have private currency, there'll be a whole lot of private currency out there. And so there's a whole lot of cryptocurrency out there. Does NYDIG take care of this wide array of cryptocurrency out there, all of them?
So and we don't know who the founder or founders or the creators of Bitcoin is. But in order to create the type of money that they wanted to, which is why Bitcoin was created coming out of the 2007 recession, that necessitated a new type of technology to come to exist, being blockchain. And so think of blockchain as like an operating model, and Bitcoin is an application on it, and every other cryptocurrency is a different application on blockchain technology. I think blockchain technology is going to dramatically change everything we know about how technology works. And that's why I think you see the White House and the regulators actually as focused on it as they are. They recognize that power. When it comes, though, to what happened, just like with any new technology, a bunch of people saw, oh, wow, that's really cool. I'm going to go build something on it. Maybe that was of good intent because they really were curious about, okay, if you had this notion of a public ledger, what kinds of things could you do? But there also were many people who were just profit seekers, like the person who created Dogecoin said, this is just a joke. But if people want to pay me for my joke, great. But that doesn't mean you should do it. NYDIG doesn't participate in those types of cryptocurrencies. The other,
Do you do Ethereum?
So that's the next point I was going to. When you think about this space, okay, it is money, and if you're touching money, you're going to run into regulations, whether that's the CFTC, the SEC, or the FFEIC. And thinking then about, okay, what is that crypto doing or not, and how is it supposed to behave? And the reality is when we've long held this view that 99% of the tokens out there are unregistered securities. And you've really heard that much more lately from Gensler saying these are securities and they're not registered with the SEC. And so I think we're going to see a big change into what the number of cryptocurrencies that are out there. To answer the question on Ethereum, we do not today make that available through our banks. We do provide that to institutional clients of ours where there's a different risk underwriting possible. I think inside of safety and soundness, it's really hard to make something available if you don't know what it is. Bitcoin is the only digital asset that the CFTC, the SEC, everyone has agreed it is a commodity. With Ethereum, and this may be a slightly more too technical of an answer, what's been interesting is that the token itself is being regulated by the CFTC. It's seen as a commodity. But if you've heard anything in the news about the merge lately, as Ethereum's moved to what's called proof of stake, staking is how the protocol operates. It's very hard to look at staking through the Howey test and say that's not a securities offering. And so, and again, these are comments that the SEC has recently been making. And so I think we don't offer Ethereum today because we need first and foremost there to be regulatory clarity on what it is before we would make that asset possible. It's not abundantly clear with Ethereum what it is. Our view would be is once the regulators are clear on it and there's a history of the protocol functioning without issues, then we'd look to make it available and banks could say yes or no to it.
Owners of Bitcoin have been pressuring the banks to take Bitcoin as collateral. That really hasn't been possible under the current law of secure transactions. But the Uniform Law Commission that I'm part of just finished a set of amendments. It'll be the law in most states in the next couple of years, in Kentucky probably by
2023.
late 2023, early 2024, that would allow a bank to take and perfect a security interest in a controllable electronic record, which is a euphemism for what Bitcoin is. Where do you see the ability for banks to take Bitcoin as collateral as its long-term effects on the industry and the bank-customer relationship?
Great question. So I think there's something like 34% of businesses in America now say they accept Bitcoin or crypto as payment. But if you go talk to any of them, they'll tell you they've had basically zero payments ever in Bitcoin or cryptocurrency. One of the reasons for that in America, if you want to pay for something in Bitcoin, you have to sell it and then recognize, either capital gains or losses on it. So just like I don't go buy 8 gold coins and then use those to go buy a Honda Accord, I'm not buying Bitcoin to usually spend it on something, 'cause I want to hold on to it and I don't want the tax hit on it. What's far more desirable though is it is an asset, just like my home's an asset or stocks are an asset, and I want to be able to borrow dollars against it. And that's where consumer demand in America is. And we actually do support several banks today and have for several years on lending dollars against their customers' Bitcoin. And I do think that's a fantastic source of interest income for banks. And if you think about lending on Bitcoin done appropriately, for example, we would usually recommend that you lend at like a 30 LTV. In Bitcoin's most volatile days ever in history, it moved about 30%. So at that point, you're still 1.5 times over collateralized. You can think of it very much like lending on stocks. The difference is you have something that's 24/7 trading. And so what happens then is if a margin call is issued and not made, and that LTV gets to say 90, it's automatically liquidated. And so it's actually, I think, a very low risk form of credit and a very good one for customers. If I go online to SoFi and I get a $10,000 personal loan and I lose my job, I still have to pay that loan. If I bought some Bitcoin and I borrow some dollars against it and I have to ultimately sell my Bitcoin, okay, but I can at least pay off my loan and I'm not left with debt. And so I do think it's very attractive for many Americans who asset ownership is now out of reach for, and for banks, it's actually a very lower risk type of lending. Was having a conversation on this with a banking regulator and even opined that, the perceived risk of this is really high. But as you really go through the mechanics of it, it's actually not nearly as high as I thought it would be. And so we do help banks do that today. I think we'll see more and more of that because you do have all this dollars locked up in these assets I own, and I want to be able to access liquidity from them.
Outside of Wyoming, which has a whole different regulatory regime for cryptocurrencies and a few other states, how today could a bank safely take and perfect a security interest in crypto?
So 2 comments on this is one, when the banks that we are working with today do this, even though it is a collateralized loan, they are recognizing it as an unsecured loan from a regulatory matter.
Good. I'm glad to hear that. That's what I'd recommend.
And we actually have some legal memos we could share on this on UCC Section 8 Section 8.
Article 8.
Article 8 is how the perfected lien can come to be on the Bitcoin. We take that Bitcoin, we put it into a custodial account for the benefit of the bank, so that way the bank never has it on its balance sheet, and it has a control agreement over that account. And I believe Chapter 12, if I have that right, or Section 12, there's something coming out under
Article 12.
That's what it is.
I helped draft it.
There you go. And so,
just saying.
I'm trying my best as a non-lawyer here.
Yeah, right.
But that's how banks do it today with us.
So I know NYDIG's spreading fairly rapidly inside the banking industry, and I know we're getting fairly technical on loans and collateralization and all of that stuff right now. Really, the first step for banks is to get into a place where their customers can actually just get Bitcoin, hold on to it, or sell it.
Be an interface.
Exactly, and then kind of going back to this comment that people don't want, the average American customer is not wanting to use Bitcoin as payment. So there's a lot of money laundering concerns. Well, people don't actually want to use Bitcoin to pay someone else with it. What they want to be able to do is just buy it. When we look across the flow of all of our banks that are live, it's 90% activity is just buying. And that's the starting point, is make it available, let your customers buy it, hold it, and if they want, they can sell it for cash and bring that cash back through your balance sheet. And then you can start to think about other products like lending or rewards on a credit card, for example.
Sort of baby steps then.
Yeah.
Right.
We saw some banks or special purpose institutions, I'll say, start accepting deposits and converting them to crypto. I'm not aware of any one of them that has succeeded. What happened there?
I'm not aware of any of them that have succeeded either. I think ultimately the way they're going about it inevitably fails at least several different regulations, or the technology needed is more vaporware and they couldn't actually do it, or the customers who said they would trust them didn't actually trust them. And it's a myriad of issues that have, I think, stopped that from happening.
When you form a relationship with the bank and the customer comes into the bank and says, we'd like to invest in crypto, what happens?
So today that's only accessible on mobile app or online banking. So it's not something that happens in the branch. When they go to the mobile app, they'd be presented with screens, an option to go to crypto or buy Bitcoin. They're going to see a speed bump notice, as the interagency guidance requires, on a third party saying, this is not the bank, you're now interacting with this new company, NYDIG. They would then be presented with NYDIG's T's and C's and privacy policies, etc., and they become a legal customer of NYDIG.
You don't read it and you hit I agree.
Right. You have to read it to hit I agree. You have to agree on all those the different forms that are there. And then you see the price of Bitcoin, the educational content, and you can say, it's linked to your checking account at the bank, and you say, I want to buy $500 of Bitcoin. And it all happens inside of the mobile app. But again, there's disclaimers everywhere around, this is not FDIC insured, and the speed bumps reminding the customer you are not interacting with the bank, you're interacting with a third party.
Roughly how many banks? Go ahead, Val.
Has the bank ensured that the customer remains theirs?
They are only able to access their Bitcoin at NYDIG through the bank. And so we do not have a retail channel where we're out competing for customers. They only come to us through the bank. And so they have to be an approved customer in good standing with you. Then they can become a customer of NYDIG, and they can buy, sell, hold with us. They want to sell that Bitcoin, it has to go back through the bank's the checking account.
To go to your app, do you have to go through the bank app first?
It's integrated into the bank app.
Yeah.
So you don't have to leave, you're not leaving the bank's app, you're staying in their app. But that's where then you'd see the NYDIG screens. And this is actually kind of two comments from a regulatory matter of safety and soundness. Today, if you have a customer who has a cash account with you and you recognize there's been suspicious activity, you can freeze that customer's account, but you can't touch their Coinbase account. If that same customer has a relationship with you and NYDIG, when you freeze that bank account, they can't do anything with that Bitcoin, because the only way they can liquidate it is through your bank. The second comment is, today every bank has a risk factor of X, being unknown. You have customers buying and selling crypto from other places, and that cash is coming in and off your balance sheet, but you can't see all of it. In the NYDIG model, you have a closed loop ecosystem where you can see all of the activity. You have a counterparty who's regulated, and so you actually can reduce your AML risk because you have full visibility into what's happening.
How many bank clients does NYDIG have now?
Today, there's about 55 to 60 financial institutions that are live, and that number will be probably 150 to 200 by the end of the year. Largely, NYDIG formed partnerships with all the cores and front-end providers to make it so that you can flip a switch and not have to do any coding yourself. And it's just as our technology partners are ramping up and able to get banks live, they're going live. So roughly 55 to 60 today.
How does someone who purchases Bitcoin through this arrangement actually hold the Bitcoin as part of their bank assets?
So it's not part of the bank's asset, and those.
No, I was saying about I recognize the bank wouldn't hold it, but.
Right. So the customer is able, and this, it's very important that in this, it's all happening in one mobile app, but the screens that show your cash balances and your Bitcoin balances are never commingled. Yeah. So it's very clear when you're with the bank and when you're with NYDIG. When customers of the bank says, I want to buy Bitcoin through NYDIG, NYDIG has a limited purpose trust charter from NYDFS that Bitcoin is held in an account there in a 100% cold storage custody account at NYDIG. And so the Bitcoin's on NYDIG's balance sheet and NYDIG is the custodian. The bank remains custodian of the cash.
I think something that has happened because Bitcoin was, I won't say it was the first, but certainly the biggest. I remember growing up, my grandmother called any refrigerator a Frigidaire. I think that's carried over to your industry where we call Bitcoin and we think of anything relating to cryptocurrency. Am I hearing you that NYDIG only deals in Bitcoin?
So Bitcoin was the first cryptocurrency to ever exist, which is why you have the kind of the name, these synonyms oftentimes used. NYDIG today only supports Bitcoin with our bank customers, and largely all of our institutional clients are also only interested in Bitcoin. There are some endowments out there that wanted a percentage allocation in Ethereum, and we do support that, but again, not for two-legged individuals, only institutions.
Something that we talked about earlier was the value of Bitcoin having come down from the total crypto industry capitalization, I understand, was $3 trillion, down to $1 trillion.
Wait now.
How much did Bitcoin come down, and has it come back up?
So Bitcoin...
showing my ignorance now.
At one point, Bitcoin was over $1 trillion last year market cap. Today, it's around $400 to $500 billion. It has, the current price it is today is higher than the lows we've experienced this year. And so it has rebounded. And that's actually, I think, a pretty strong market support thing, without going too technical here, with the blow-ups of Celsius and BlockFi and Three Arrows Capital, that put
those are the deposit-taking institutions?
Kind of.
Yeah.
These were more the retail crypto native companies. When they blew up, it put tremendous sell pressure in the market, more so than we've ever experienced. And the fact that Bitcoin's price stabilized, it did fall, but it stabilized, and that's because of new buy flow came on from institutions and consumers. But here's a good opportunity. If you've heard of BlockFi, they were a pretty well-known retail crypto native platform. If you went to BlockFi and you thought you were buying $100 of Bitcoin, if you read the T's and C's, you weren't actually buying $100 of Bitcoin. You were lending BlockFi $100 of your money. You thought you owned Bitcoin, but you never did. You simply you were a general creditor to BlockFi who showed the value of the loan they had to you denominated in the price of Bitcoin. That's obviously very different than saying, hey, we're a regulated custodian. We're going to take your $100 and you own $100 of Bitcoin. We don't control it. We can't rehypothecate it. But that's the type of misunderstanding that many consumers just don't know how to do that research. And then they found all of these unsafe and sound players out there.
So if I can get John away from the security side of Bitcoin for a second and simplify this a little bit for our bankers out there. The banks are at no risk in this whatsoever. I guess you could always argue reputational risk, but past reputational risk, there's no financial risk whatsoever to the banks. It's off balance sheet. It's all kept over here to the side. It's very clear. It's on their website. They get to keep their customer, and they're serving those customers of theirs that want to get into the Bitcoin, whether they understand Bitcoin or not, which would be me. If I bought one, I would have no clue what I had. But
I kind of think of it's like almost like you offer a little cul-de-sac for your customers. Instead of them taking dollars and say, hey, transfer this to Coinbase or transfer this to BlockFi, you're saying, hey, I've done my research to say here's a safe closed loop spot that has nothing to do with my bank, doesn't touch the bank, there's no risk to the bank, there's always reputational risk. But if you really want Bitcoin, I found a safe partner. You can send $500 to them, just like I was letting you transfer $500 to Coinbase, but now it's in this closed loop ecosystem. And it does provide a very safe way for banks to get into it with very little risk to the bank.
Patrick, thank you for being with us today.
Great
I hope
questions.
you have made Ballard and I smarter with our children.
I appreciate it. Thank you guys for the great questions and for having me here today.